Bitcoin is the king of crypto. When it moves, everything moves. So if it's going up, the whole market goes up. And if it's pulling down, it also pulls the whole market down. So I use it as a macro indicator. But what can we learn about Bitcoin from the 2017, 2018 bull run that's going to be reflected and likely with high probability in this current run? So if you like today's video, that's what we're going to dive into. Like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So we're going to focus on Bitcoin. So this is the macro weekly chart from 2017 up until today. So we've had a very clear bull run in 2017, a big correction, and then a nice big run up, and then we seem to be in a correction, and we want to talk about that. But I'm going to zoom down to 2017 because there's a few things that we want to be really aware of, hyper aware of, to maximize our probabilities of winning. So I'm going to use TradingView, and this allows me to take the data back. It says I can take the data back as far as I like. If it lets me do this, let's have a look. I want to take it back to over here. There we go. This is what I was looking for. Bang. All right. So I'm taking the data right away back to 2017. And what I want to emphasize, this is a weekly chart. And we're going to emphasize this. Now, at the time, people didn't know how much the market was going to pump. But in the last few weeks and months of the bull run, the market went parabolic. Like it literally was almost pointing vertically up. There was a lot of money pouring in, and it went from 10,000 to 20,000 relatively fast. But this is the point that I want to bring in here. So this, we know in hindsight, was the top of the market. The top of the market in 2017. If you look at candlesticks, we'll see that it kind of made this particular pattern. But what I wanted to really look at today was what can we learn from 2017 that can help us prepare for this 2022 bull run. Are we going to get this fifth leg, this last leg lasting 3, 6, maybe 7, 8, 9, 10 months? That's going to really impact the entire market because we want to prepare ourselves on the upside, but also on the potential downside. So first of all, it went really, really high. Like these were the typical ratios over here, but it just really overextended. And then we're expecting a correction. But what I want to look at is a couple of things. One is the momentum indicator, right? There's some clues in this, and I know it looks like squiggly lines, but this helps us see the momentum of the market and what's the likelihood of it going further up and further down. So what I'm going to do is I'm just going to pull the market data like this. I'm just going to let it unfold. TradingView is the software that we're using here. Now, when we're looking at a momentum indicator, when the blue line is over the red, basically pointing up like this, or like this over here, not this arrow here, I want this one over here, pointing up like this, that tells us that the macro trend is up, and we want to ride the trend. The trend is your friend. Ride it until its end, until it reaches its bend. It's a classic saying in trading, and we want to leverage that information. So what we're looking for here with crypto, because at the time, what we got to remember, at the time, no one knew that this was the top. There was a lot of speculation saying that, it looks like a nice A, B, C style correction forming. And on the next bullish reversal, we should anticipate sideways to up. That's natural, it's normal, and that's what we're looking for. So even when we were patient, and I remember this very clearly, and we want to prepare for this because remember, we say probabilities and never certainties for a reason, and it's because we need to know that no one knows what's going to happen. We can only look with probabilities. So as the market unfolds, I'm just going to unfold the data a bit more, just a bit faster, and clean this up, because there's a couple of things I want to emphasize, really, really emphasize. Is at this point over here, the blue line is almost over the red. This is what I'm looking at. I'm looking at this. In fact, let's just forget the price for a second. I'm waiting for the blue line to cross over the red. Bang. There it was. Right? So the blue line is now officially over the red. Can you see that in the bottom? Let me just make sure that's crystal clear. So at this point in time, it was highly probable that we're going to see a continuation of Bitcoin. Why? Well, there's a few things. a few things. So now let's just get rid of the momentum indicator. We've had this very nice movement to the upside, but then a very aggressive correction. Well, I say aggressive, we weren't that aggressive at this point. At this point, if we just take the low to the high as a retracement, this is going to all hang together, because what we're trying to look at is the macro thinking, the real high level thinking, and a typical correction, and getting the probabilities in our favor. But we also need to know that there's no guarantees in this game. So look, this correction at this point was 50 to 62%. Normal correction range. It looks like at this point a nice A, B, C correction. An extended wave C, but a wave C, the typical maximum is 1.618 of this wave A. So I'm going to make sure this is very, very clear. So everything was lining up, because I remember doing this analysis at the time in 2017. It looks like an A, B, C, right? And we can make multiple wave counts, etc. But the main thing is, 2017 we had this really nice movement to the upside, and then a nice A, B, C correction. And there was no reason to believe that we shouldn't anticipate. The only thing we should really anticipate is new higher highs, right? That's typical. That's what we're expecting. But what you will see me saying with like Cadena, with Solana, with other trades, is you have to protect yourself to say, okay, what if it doesn't unfold the way you're anticipating? That's absolutely key. So what you always look to do is the minimum that we expect is a 50% retracement to the upside, and there's a particular time retracement that we want to be aware of, 38 to 50%. And I'm showing you this for a reason, because this is the minimum expected zone that we want. But what happened with Bitcoin? Well, in 2017, what happened was it didn't, as you know, as you're probably aware, it didn't go on to make higher highs at that point. What happened instead was it tagged that minimum area. And this is why I'm always saying that you want to be taking profits, become risk-free in this area, and use Bitcoin as a macro indicator. What happened is, let's just unfold it a bit faster now, is the market made new lows, right? And then at this point, it was like, okay, it seems to be forming something else. And now if you fast forward a little bit, this is a weekly chart. I'm just going to zoom in like this. We got the reality check. It's like, okay, this is going into a deeper correction. Okay, if we just get rid of these, because this would have been live at the time. We go, okay, this doesn't look like an ABC no more. It's gone to a lower low. Okay, this is turning out to be something different. And now it's turning into what's called a complex correction. And then it went deeper and deeper and deeper and deeper and deeper and deeper and deeper. And the point that I want to make here is, at the time, in 2017, in this moment in time, at this zone here, it was January, February of 2018. No one knew. It looked like at this point it's likely to go sideways to up, but it didn't. Right? And the market's going to do what the market's going to do, and it made what's called a complex correction, and it went on for a further, I think it was 8 months, February all the way to, it was 10 months, right, to December, almost a year. So it's a very complex correction, right? And there's a couple of things that I want to now say, how can we use this information for today? So now what we're going to do is we're going to fast forward all the way up into today's data. So let's just play the game. This is what happened. This is literally what happened. I'm going to zoom it in like this, and we can just watch it unfold. There we go. Let's see how fast it unfolds. And this is let it unfold. So we had a movement to the upside. It was the biggest movement to the upside. This, by the way, is what you call an overbalance of price, where it's is much bigger than any other previous move to the upside. And that gives us a real clear indication that this is a high probability trend reversal. We're obviously playing the game of hindsight right now, but we're going to take it up into today's date, where we're going to play the game from, okay, we don't have the future. We have to now look at the information at hand that we have. Right, I'm going to need to get this faster. Let's see how. All right, here we go. Then the market took off, right? Then it took off, and this is what we've had. Pretty much, this was April, I think it was March, April 2021. We had this really nice movement to the upside, what we're calling a wave 3. So now this becomes clear. This looks like a wave 1, a wave 2, and then a wave 3, right? A wave 3, and now we're getting close to today's date. So now we're going to just let it unfold so we get today's data. There's a few more months. And by the way, we pegged this high. This was my first ever YouTube video. We said this looks like a high because of these ratios. We got particular ratios, and then we're looking for this correction happening. And then the way it unfolded, again, it was a bit unusual the way this correction unfolded. But what I want to now focus on is the momentum indicator, right? When the blue line crosses over the red, right? The blue line crosses over the red. That's when we're looking for the market to go sideways to up. The trend is your friend right until its end and until it reaches its bend. But when the momentum's in our favor, especially 2 degrees of momentum, when we normally use weekly and daily, that gives a probability that we're looking for sideways to up. That gives us an indication of the low caps as well, what's likely to happen again. So now let's just let the market unfold. Again, blue line goes beneath the red. Now, just because the momentum reverses doesn't mean it's going to come down. It just means the probability, and we want to be aware of it. So we're trying to combine momentum, pattern, and price. That's what we're looking for: momentum, pattern, and price. And then let's just get it. We're close to today's data now, and this is pretty much where we are as of today. As of today, so there's a couple of things that I want to now focus on. Looking at this macro picture, first the pattern. There's something quite it's advanced, but is simple, but not easy. But if you know it, when wave 2 is complex, wave 4, bump, 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 tends to be much simpler, much cleaner and simpler. Now, in hindsight, and when we've got this now, and we pretty much projected this in advance, it looks like a nice clean A, B, C. But there's a couple of unusual things about this particular correction, and it's called a running ABC. Now, in my course, I have a course, an Elliott and Fibonacci course. We're doing a stupendous offer at the moment, by the way, which is the course is normally $997. How to read the markets like a pro, pattern and price. It's normally $997. Currently, it's £97. But in the course itself, there's a lesson in the Elliott wave section called, I think it's here. I think it's lesson 4, lesson 9. Lesson 9. I'm just going to click into this because there's something in particular I want to show you. This is a particular pattern that we're looking for, and it seems to be unfolding. It's called an ABC correction, but it's an ABC running correction. And what I want to emphasize here, because this is what's happening right now, because we want to see what's the, because the market movement, the behavior is human psychology playing out. Fear and greed driving the market, and we see it again and again. And a running ABC correction basically means what we're saying in terms of Bitcoin, this is the wave 5 of a wave 3 up here. And an ABC running correction is where the first wave B, this B over here, if you can see that, it exceeds the previous high, right? And that's this part here. And then the wave C on the way down doesn't exceed the previous low, right? And that's what we refer to as an ABC running correction. It's a bullish sign. It's almost like saying it's overshot on the upside and it hasn't sold enough to exceed the low of the previous low, right? And this is the ABC running correction. I'm emphasizing that because we want to look at it in a logical, mechanical, objective way. And by the way, if you want to learn how to do this, I got a free Elliott Wave and Fibonacci masterclass. I really break this down at a high level because you'll see these patterns unfold time and time and time again. And if you like it, buy my course. I'm doing a massive discount right now. It's £97. Elliott Wave breaking down into foundation, intermediate, advanced. Fibonacci ratios, price ratios combined with momentum broken down to foundation, intermediate, and advanced. And when you combine those elements, you'll be able to see things in the market that you can't normally see. And we want to leverage that information. And this is what we're seeing here. This is what I believe we're seeing here, should I say, is an ABC correction. But we're seeing the wave A, an ABC up here, the wave B, and a wave C. And again, what you'll see, if I just get the lines drawn out, is that this wave B, as we saw, has exceeded the previous high, which is not that common, but we want to be aware that it does happen. And that's one of the conditions for a running ABC. And then the wave C itself down here has not exceeded the previous low, which is over here. Now, that by itself might not be enough information, but we've got two other factors that is also indicating that this is the probability. So when I'm looking at this, again, back in the lesson, That's what we're looking at, an A, B, C running correction. Again, remember, I'm just taking you through this because sometimes if you're not used to it, it can be a bit complicated, that this B has overshot this previous high and this C has not exceeded the previous low, right? Because normally when we're having an ABC correction, it's normally an A, B, C like this. That's a normal zigzag. And what we're looking at is not a normal zigzag. We're looking at an ABC running correction. Very, very, very important distinction. Not an obvious distinction, but it is something that we want to be aware of. So this by itself is not enough information. There's another thing that we want to be using to get the probability in our favor, and it's momentum, right? And I want to take it like this because we're looking at macro picture. It's a weekly chart. We're looking at the big swings because the big money is made in the big swings, and we want to ride the trend. The trend is your friend. Ride it until its end, until it reaches its bend. That's the traditional crypto, not even crypto, trading saying. But what I want to focus on now is, I'm taking my time with this, is this bullish reversal, how it lines up with this low very, very nicely. Yeah, we see that very, very clearly. This low over here, this here, even though it was done on the upper half, it marries up quite nicely with this low. It's not that far off. And again, it's a momentum indicator, which indicates the momentum. That, is literally in the name. We're indicating. It doesn't guarantee the momentum, but we're trying to combine the momentum with pattern and then with price ratios. And when they coincide, it's called a confluence of events. It's a higher probability outcome of what we're looking that's going to happen next. But there's a couple of things that I want to emphasize. One is what we're seeing. So now we've got this bullish reversal here happening, right? We can see that really, really clearly. The blue line is clearly over the red. So that gives us a high probability that this low will maintain, this low over here. I'll draw the arrow like this. But then when we zoom like this, and we're looking at the macro picture of Elliott wave, and does it hang together? Does the story hang together? A wave 1, a wave 2, a wave 3, which is an aggressive wave 3, ABC running correction. If that is the case, what typically happens after an ABC correction? Well, the market goes on to make new highs. It goes on to exceed the new highs. Right? That's typical. That's common. But it's not guaranteed. When I say probabilities, never certainties, it means, and that's why I wanted to start today with a very, just straight up, in 2017, there was a clean ABC. It hit 1.618, it hit a time ratio, and the momentum did turn bullish. It did hit the minimum expectation, and we didn't get the follow through. It actually turned out to be a complex correction. But there's this thing called the pattern of alternation, and it means when wave 2 is complex, long, it's hard to know when it's going to end, and it's complex, it's overlapping, and it's long, and it kind of goes on and on and on. When wave 2 is complex, wave 4 tends to be simple or simpler in terms of nice, clean, obvious waves. Also, when wave 2 is complex, wave 4 tends to be less in time than wave 2, right? So what does that mean? Okay, what I'm going to do here is I just want to do this because I want to get this thesis, this thinking, the macro thinking in play, but also the caveat that there's no guarantees in this game. Doesn't matter if you're doing large caps, so Bitcoin's obviously the largest cap, or low caps. There's no guarantees in this game. We're going to measure this. There's a tool down here called trend-based fib time. We're going to literally click this 2017 high, this December 2018 low, and we're going to project it from the wave 3 high, and the number that we want is the 100%. Typically, when wave 2 is complex, wave 4 is less in time, and when wave 2 is simple, wave 4 is normally longer in time than the simple. So what we now have is a couple of big clues. And again, we're keeping it objective, mechanical. It's Bitcoin, but we're almost ignoring that it's Bitcoin. Let's just look at the technicals, the psychology of buying and selling, and what typically plays out. So here, what's the date here? It's April 4th. Typically, this is the maximum, so we're expecting it to be less in time. Remember, it's less in time. Bang. So it should be less. We've got a nice clean ABC and ABC. Another thing that we want to take into consideration, if I just get rid of this like this, is wave A's in time often equal the time taken for a wave C to form. So we can do the same thing. We're going to measure, just to now kind of narrow it down even more, of the end of a wave 4. Measure this potential wave A, what looks like a wave A, project it forward from this wave B, and now this is the typical maximum, and the typical minimum wave C is 62%. And we can see we're in that range now. We're in that range. And then last but not least, we're also going to do a couple of other things. Is wave 4s, this wave 4, bump, bump, bump. Most wave 4s end in the typical previous wave 4. And by the way, if this is new to you and you like the look of kind of looking at the market in a way which is objective, it's mechanical, and you're reading psychology, Arthur C. Clarke said it best. He said, any advanced science is indistinguishable from magic. And sometimes these ratios look like magic. But once you've been doing it, because I've been doing this for over a decade, with the Forex markets and everything else, and it applies incredibly well to cryptocurrency, and you can apply this. Take my free Elliott Wave and Fibonacci Masterclass. I break this down in high level terms so you can kind of get a real feel for how powerful this is. And then if you like, you can buy my free, not my free, it's £97 for my course, it's 90% discount. But you get an invite to my private Telegram. We do weekend workshops, and we're doing a lot of other strategies just to increase the probability of you winning. So when a wave 4, the previous wave 4, this is important, and I'm doing it like this deliberately. This wave 3, most wave 3s typically break down to a 5-wave sequence, right? It's called, you have a degree of count, and then within that wave, there's normally waves within the waves, right? And it always moves in 5s and 3s, and often the patterns are relatively clear. And this one was pretty clear. And we drew this out in advance. This looks like a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. And we want to draw this and call this the intermediate wave count. It just makes it a bit clearer. So we can just see it like this. And the reason I'm doing that is most wave 4s, like we're doing a macro wave 4, this is a macro potential wave 4 forming over here, end in the range of the previous wave 4. And what's the previous range for? It's the smaller wave 4, which is over here. So what we can do, and we want to take this information into account, right? Because it just gives us a bigger edge. This is the range of the previous wave 4. And I said this in my video this is my first ever YouTube video back on April 19th, 2021. So now we can see that the price over here for wave 4 looks like it's in that range. And then I'm just going to do one or two other things, and then we're going to wrap up. So we can now just get rid of this. I'm going to do two price retracements for a wave 4. One is most wave 4s are 38 to 50 to 62% of wave 3. Like, what you get? Okay, well, this movement here is a wave 3. That's what we call a wave 3. It's a pretty obvious wave 3 in terms of, look at the degree. It's an impulsive wave, very, very clear. And the retracement of this tends to be, so I'm going to get a retracement tool, and we'll do it from here. On this low to this high. There's a couple of ratios that we want. It's 38.2 to 50% is most common. And you can see these two green lines, if we zoom in, is within the pink box. That's these green lines over here. And then lastly, we're just going to do a quick alternate price projection, which is we're going to measure this wave A projected from this wave B. And most are 62% to 100%, which is this ratio to this ratio. And it's really the 100%. And you can see that's a key ratio. So now we've got price, we got pattern, we got momentum in our favor. We've got some other is in the range of the previous wave 4. And we know from the principle of alternation, it's more of a guideline rather than a rule. When wave 2 is complex, wave 4 tends to be simple. All right, and then we got some time and everything else. So now we've got a lot of information saying, okay, from a totally technical standpoint, it looks like this is hanging together nicely. It doesn't mean it's guaranteed. It just means it's high probability. So we now should go on to see a new high being made. And that's my thinking and thesis. And when if Bitcoin does this will be very optimistic for the entire market. and we'll probably go from a 2 trillion market cap cryptocurrency market to like a 5, 7, maybe even $10 trillion, and it can happen quite fast. It can happen quite fast. So when you're in low caps, when Bitcoin moves down, they move down extremely, like really, really aggressively. And when Bitcoin moves up, and there's the optimism, low caps, like under 50 million market cap, 10 million market cap projects tend to move up aggressively. We're talking about 10x's, 20x's, 50x's, and it can happen almost in a flash. So we want to be prepared for that. So today was really all about macro thinking, macro thinking. So if this is the wave 4 low, let's just finish up on one last thing. Let's just get rid of this now. Let's just clean this up. We'll leave those bits in play. Let's just do an end of wave 5 typical projection. Right, we're going to measure wave 1, the wave 1 low of 2017 to the wave 3 high of 2021. This is real macro, and this low of wave 4. And there's two main ratios, 62 to 100% of that range. But crypto is crypto. There's fear of missing out, FOMO, and panic buying. Very common in commodities, but now we're seeing it in crypto because of that same human emotion called panic buying. Fear, really. The typical ratios is this range here, which is, we're talking about just under 100K, six-figure Bitcoin. But it's quite common that we'll see that overextension of 1.618, which is around $130,000 Bitcoin. And to be honest, I'm anticipating that it's going to overshoot, probably hit these ratios, these typical ratios. But then what tends to happen also with institutions as well is this panic buying, which causes a more aggressive correction. And if it does occur like this, and the word is if, there's no guarantees here, even though it's all hanging together, the correction can be quite aggressive. So we want to be prepared for this now. We're anticipating this. And if it does happen, it will impact your whole portfolio in a positive way. But you want to be ready to be taking profits, getting risk-free, doubling down, compounding, have your strategy really clear, your business plan really, really, really clear. So there you have it. If you want to learn how to do this, I'm telling you, I'm getting such great feedback from the course, and we might need to increase the price. The feedback's so good. But the price is $997. You'll get it for £97. But I would say take my free Elliott Wave and Fibonacci Masterclass so you can really check it out first. Check it out if you like it, and then just take the course and you'll get an invite to my private Telegram. We do a lot of workshops, we're doing, today, we did a vote and we're voting in the top 5 cryptocurrencies in the group. There's 400 people in the group. It's an amazing community. I do a private analysis on the coins that have been voted in. We do some extra things on the weekend and so on and so forth outside of this YouTube content. But today's content was Bitcoin macro thesis, macro picture. We're relaxed. We're mechanical. We're looking at the bigger picture. We know the momentum's now up. We got the wave 4. We got pattern. We got price. We got time. All in our favor, but it doesn't mean it's guaranteed. And that's the caveat. That's how you need to hedge and get risk-free where you can. So assume that you're wrong until you're right, but then ride those waves. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote. What's today's quote? It's chapter 5. The chapter itself is called It's Simple. And then underneath, this is not the quote, but it says, becoming financially free is simple, but not easy. It's not easy because it's more of an emotional game rather than a physical and technical game. Technical plays around 10%, and you need to get the psychology right. But the quote today is Leonardo da Vinci, simplicity is the ultimate sophistication. So today we're just relaxed, no hype, we're just calm. We're looking at the macro picture. We're doing high-level technical analysis. Elliott Wave Fibonacci I found to be the most powerful at reading human psychology in the markets, especially the crypto markets, because a lot of raw human psychology, because it's unusual in the history of mankind to have young projects price data available. So even if because I like low caps, because I like to see that there's an asymmetrical risk reward ratio, meaning that the alpha, the upside potential is huge and the downside risk is minimal, as in we can cap our own risk, which means you can make a significant difference. But there's no guarantees in this game. It's always probabilities and never certainties. Let's stack those odds in our favor so it increases the chances of us winning in this beautiful game called crypto. I call it crypto tennis as a sport, but the technology's here to stay. We're at the beginning, pretty much of the beginning of a 20-year trend. And it feels like it's 95, 1998, and the internet all over again is Web 3.0, but there's a lot of opportunity in this space. So like, subscribe, hit the bell notification, and I'll see you very soon.